Hello everyone, welcome to my channel Accounting with Gawhar Baig. Today we are going to see the journal entries and ledger entries for recording the disposal or sale of non-current assets. So first of all, let's look at the journal entries for the disposal or sale of non-current asset. The first journal entry is the elimination of cost, disposal account to be debited and non-current asset account to be credited. You can also see my previous video on this elimination of cost. Then the second entry is the provision for depreciation account to be debited and disposal account credited. I have also prepared a video for it. You can see my previous video for that too. Then we have the third entry, which is cash, bank, or receivables, which is recording the selling price, and disposal account will be credited by the selling price. Last of all, we have to record either the profit or loss on the disposal. So if you have a loss on disposal, then income statement will be debited and disposal account will be credited. Or if you have a profit, then disposal account will be debited and income statement or statement of profit or loss will be credited. As for the ledger entries, which is in the general ledger, the disposal account, you have the non-current asset, the cost price. Then you have the provision for depreciation, the total depreciation of the asset sold. Then you have the selling price as cash, bank, or receivables price. Then if you have a loss, then you record on the credit side, income statement, statement of profit or loss. This is the loss in disposal. Or if you have a profit on disposal, then you write on the debit side, which is statement of profit or loss, the profit on disposal. Now let's go to an example which will clarify the whole thing for you. The example being the following information is available for Mr. Gawhar Baig as at 1st Jan 2024. Office equipment account, it cost $4,500. Provision for depreciation on office equipment account, $1,500. During the year ended 31st December 2024, the following transactions took place. On 1st June, check issued for new office equipment. So we are not going to deal with this transaction as we are dealing with the disposal. We are going for the second transaction. On 1st July, equipment costing $800, which was purchased on 1st May 2020, was sold for $600. So let me remind you that in this transaction, they have given you two prices. One is the cost price, another is the selling price. So let's go and prepare the journal entries to record the disposal or sale of equipment during the year. The first entry will be the disposal account to be debited by the cost, which is $800. And the non-current asset account, which is the office equipment account, will be credited as it is the elimination of costs. The second entry will be provision for depreciation, will be debited by the total depreciation of the asset sold, and the disposal account will be credited by the total depreciation. So you can also see my video, my previous video for the total calculation. Still, I'm showing you the depreciation calculation again. We purchased the asset on 1st May 2020. So we basically used it for the year 2020, then 2021, 2022, 2023, and 2024. Then we have to apply the policy here, which is in the year of purchase, a full year's depreciation is charged. So it was purchased on 1st May 2020. Irrespective of the date, which is on 1st May 2020, which is about 5 months later in the year we bought this equipment, we'll still charge for the full year as the policy states. So in 2020, we'll be charging the full year's depreciation. And as for in the year of sale, no depreciation will be charged. The current year is the year ended 2024. So we will not consider the depreciation for 2024. So what we are left with is 1 year, and then the second year, then the third year, and the fourth year. So technically, we have used the asset for 4 years. So the depreciation calculation will be for 4 years using 20% straight line method. So 20% on the cost of the asset, which is 800 for 4 years, which goes to $640. Now let's record this amount within our journal entry. 640 to be debited in the provision for depreciation and 640 to be credited to the disposal account. Then the third journal entry, which is the recording of the selling price, which is $600. Since nothing is mentioned how we receive the money, we can write just bank/cash, $600, disposal account to be credited by $600. Then you need to do a simple working for the asset, that is whether we are making profit or loss on disposal. Let's check for this by first calculating the net book value of the asset. Net book value is basically the cost minus depreciation. The cost is $800 and the depreciation is $640. If you're selling anything above the net book value, that will give you a profit. And if you're selling anything below the net book value, that will give you a loss. In this case, we are selling the non-current asset at $600. So basically, we are making a profit of $440. So let's record the profit by debiting the disposal account, by debiting the $440 and crediting the income statement or the statement of profit or loss by $440. This is the journal entry for recording the disposal of non-current asset. Now let's go for the preparation of the disposal account. First of all, we'll record the cost of the asset disposed, which is by debiting the disposal account of his equipment. The cost is $800. Second entry is the provision for depreciation, which is $640. Third is the selling price, which is a bank or cash, $600. Then the balancing figure, which is basically the income statement. Since we are making a profit, you'll see that the profit will appear on the debit side, which is also the balancing figure of the disposal account. So that's the disposal account for you.